Good afternoon, ladies and gentlemen, and welcome to the Yourgene Health PLC interim results investor presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Just please simply type in your question at any time and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet company dashboard, and we'll notify you by email when they are ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we would like to submit the following poll, and if you would give that your kind attention, I'm sure the company would be most grateful. And I'd now like to hand over to CEO Lyn Rees. Good afternoon, sir.
Good afternoon, and thank you, Mark, and thank you everybody for joining us again here for the interims presentation. Myself, Barry Hextall, our CFO, and Hayden Jeffries are here with you today to talk through the slide deck, and we look forward to sharing this latest update with you and receiving some questions and some feedback at the end of the presentation. So I'd just like to start by opening up by saying Yourgene Health is now a leading integrated technologies and services business, enabling the delivery of genomic medicine. The reason I say that is as an organisation, we've grown significantly in the last couple of years, and where we sit today, we supply a range of over 100 products and services into the global marketplace, which can be further defined by this slide here. If you look at the grey bubble on the left, these are our services. So these are where we receive a sample into our labs, either in Manchester or in Taipei, and we offer a range of services to the marketplace covering those sorts of samples, from DNA extraction, genotyping, right the way through to whole exome and RNA sequencing. On the right-hand side, we have our purple bubble. These are our products and services. So these are what we consider core now within the Yourgene product offering. A DPYD product, which is obviously in an oncology market, cystic fibrosis and QSTAR in reproductive health. We have our new Ranger technology, our spaghetti strainer for sample preparation, which we'll talk a little bit about more later on, as well as our analysis and all of our software that comes from our bioinformatics, and also some of our hardware like the SP150 sample prep platform. Where these two circles overlap, that's where we can offer both products or services to either side of the circle. So both NIPT and COVID are products that we run with our customers in their labs, and also products and services that we run in our own labs. And I'm going to hand over to Hayden now, who's going to give you a bit more flavour of how that works from a customer perspective.
Thank you, Lyn. And so looking here at how we have integrated the genomics portfolio from a technologies and a services point of view, we've always been able to offer the customer the choice of outsourcing that testing to us or running the test in-house. And we really first did that with the Iona workflow, where we've had the Iona running in our Taipei and Manchester labs for a number of years, and we support customers out in the field when they're going through either an upgrade, a service, or they have some problem where they need to send samples to us. The second product that we've had both in the technologies and services side is our Clarigene assay, which has been the foundation of our COVID-19 testing service. We sell the assay out to other labs, and we also run it in-house, where we've been supporting the travel testing, the day 2, the day 8, and the fit to fly testing. And that was the foundation for our first DHSC contract in the autumn surge, where we were testing samples coming in from various outside clinics. The NIPT workflow is one of those that, as I said, has been very instrumental in bringing both technologies and services together, and we're able to offer a broad range of products there and additional content. And the Light Bench, which is part of the Iona workflow, is also used in our service lab as part with liquid biopsy and within research services, and we sell that through our genomic technology services into other labs and other applications. And all this allows us to support development programs for our pharma partners, where we can bring a test or a biomarker through from academia, from pharma, or from a diagnostic company, build up that clinical evidence, that validation, and move it through potentially into genomic technologies where it can be manufactured and sold.
Thank you, Hayden. And apologies for taking you back in time a little bit, but the reason I wanted to show this sort of timeline is just to show how much the business has evolved. One of the challenges of COVID has been being able to get in front of our investors and our shareholders and really accurately communicate just how much growth and how much change has been driven by this business over the last couple of years. So For the really early investors, you'll remember back in 2015, this business came onto the market with an NIP ticker. We had one product, we had 10 people in our organization, and we had zero revenue. Myself, Hayden, and Barry started to work together in 2018, which is when we really refreshed the Yourgene story. We changed the name because we felt that there was a far significant and wider opportunity to bring a range of molecular diagnostic services to the market. We wrote off the thermodoubt, we settled with Illumina, but more importantly, we set about our strategic plan, which was fundamentally to offer more content to our customers, to find more customers, and to really target some of the largest geographical markets available to us as a healthcare organization. And since that point in 2018, we brought new products in through the acquisition of Elusogene, which also gave us an additional platform in PCR, which has been specifically valuable around the launch of our DPYD product, but also our Clarigene product. In 2020, we acquired Coastal Genomics, which brought us IP for the first time in our organization, and a real door opener for the US market. As I said, this is a technology that allows you to spaghetti strain. So you can take a big sample of blood and really quickly strain out the things you're not looking for. So you get the part of the DNA and RNA that you're looking to sequence. You can get it quickly on the sequencer. So hopefully improve speed of result and the cost of result, because you can get more samples on a sequencing chip. In addition, we bought X5 Genomics, which is fundamentally the platform that is Genomic Services today. So a business that was doing about £500,000 when we bought it, and delivered £9 million worth of revenue in the first half of this year. And that has allowed us, as we can see in 2021, to expand into the America market, where we've signed some significant contract wins for our range of technology, one of whom is LabCorp, who have since published the work that they're doing on the platform. So we were able to share one of the two blue chip customers that we've entered into a contractual arrangement with, and obviously put in front of the market our COVID testing services and sequencing services, where we've already successfully won multiple DHSC framework tenders, and we would expect for that to continue. In terms of what that's done for us as a business, as I said, we've gone from sort of 10 people, one product, and zero revenue in 2015 to where we sit here today in 2021 with a headcount of around 230 people. Revenue for the first half of the year, 17.5 million, which was pretty just below what we delivered in the whole of the previous year. Over 100 products. And when we look at the run rate for the business right now, I'm pleased to say that at the end of November, we were finished on an unaudited basis at 23 million. So delighted to see that run rate continuing into the second half of the year. But the purpose of me sharing this with you is to say that our organization, Yourgene, is a much broader organization now, offering many, many more products and services into the global marketplace. And whilst NIPT is still one of our key growth drivers, it's now one of many in our organization. In terms of the business highlights, we've seen good growth this year for Iona NX workflow. I'm particularly proud of new installations in the US, in Mexico, in Singapore, Switzerland, and Italy. I think some of our more established existing customer base has had some non-foreseen challenges, specifically around some supply chain disruption that I'm sure is affecting all of us in our day-to-day lives at the moment. Our industry isn't immune from that, and a lot of products and services get prioritized towards COVID. That means certain plastics, certain raw materials aren't available for the rest of the market. We've also had some of our customers entering into extended validation phases. And adding to that, some particularly funky phasing of ordering that we've seen over the last 12 months, as certain customers look to stock up in anticipation of a geographical shutdown, or looking to stock up as we came to the end of supplying our previous product platform. That's caused what looks to be on paper a revenue decline in NIPT. But when you normalize that, NIPT has been pretty much flat this year, which is disappointing for the first half of the year. But when we look forward and the run rate that we've since seen in October and November, we're starting to normalize that situation now. And with NIPT being adopted by many, many more countries since we first started talking about this 3 years ago, now becoming mandated in a lot of the markets where we sell products, we see a continued adoption for this technology. and we remain as excited as ever about the future potential of NIPT, specifically as we look to focus on more established healthcare, geographical markets such as mainland Europe and the US. In addition to the progress we've made with Iona NX, we were delighted that the Coastal Genomics team hit their milestone earnouts, and we issued $2 million worth of equity. That was fundamentally due to the two big contract wins with the US diagnostic majors, one of which is LabCorp. I know I've been frustrating myself not being able to share who both of those are, so it's great news to show the sort of size of organization and caliber of organization that LabCorp are, who have invested in this technology and are currently looking to utilize that in one of their many workflows. And hopefully, once that technology beds in, there'll be additional opportunity within that organization. Plus, I think, having just spent 10 days over in the US and spoke to most of our potential collaborators and partners, it's very clear that the message is out there now about the Coastal Genomics technology and its timing in terms of quicker turnaround, cheaper testing, is very much needed in the market. So really pleased with the progress of that business over the last 6 months. We've expanded our geographical reach as we promised. We've regreened some of our distributors, so we have new distribution in Middle East, Africa, and Eastern Europe. Our DPYD, our chemotoxicity assay, continues to grow, and revenue has doubled again in this period, and we would expect this product to be in excess of £1 million worth of revenue by the end of our financial year in March. And then the additional growth driver that we brought to our organization since the pandemic started has been our COVID-19 testing services. We generated £9 million worth of revenue from that in the first half of this year compared to just 0.4 in the previous period. We've been awarded public tender contracts, which contributed to just £0.6 million worth of revenue as we came to the end of the first half of the year, because that's when they were just bedding in, and already delivered 0.6 in the post-period end. Our Clarigene product, which is the assay we brought to market to test for COVID, has proven to be robust against all the variants that have been in the market and continues to be so, and contributed £1.4 million worth of revenue during that first half-year period. So that's £2 million new products that we brought to the organisation or to the market, both of which look continue to set to grow in the future. In terms of post-period highlights, DPYD is a product that we expect to continue to be adopted and recommended on a region-by-region basis. The latest region to accept the need for this kind of testing that saves 1 in every 100 lives, roughly, who go through the test is Spain. We have a long-standing distribution relationship in that market and are looking forward to rolling out the product in the new year as the market builds in that segment. Our expectation is that we will continue to provide COVID-19 testing services to all of our existing partners, both public and private, until the end of Q4. So I know there's been some new numbers issued today. I think it's our second upgrade of the year. And it doesn't take a lot to work out our current run rates based on the fact that we're around 23 million at the end of November. And should COVID continue throughout the year, then we expect to see continued growth from a revenue perspective there. And obviously, as we conduct this meeting today, there's a lot of COVID surging around the country, so we expect to be busy over the next couple of months. We've won a further contract under the national framework, and that's for COVID-19 sequencing. So for that's receiving positive samples into our facility in Manchester, where we will sequence those samples to understand what type of variant and positive result we're getting. That contract is in process now. We've validated a large number of samples over the last couple of weeks, and we expect to be receiving samples routinely from next Monday in our organization. The contract value has a value up to 5.5 million until the end of March 2022. There are no minimums in the contract. So as usual, we've been cautious in terms of forecasting what the impact of this could be. So I'll probably come back and update you early January or later in January to give you the impact and an upgrade as necessary at that time. Coastal Genomics, who I've already mentioned, has now been fully rebranded. And as part of that new branding and our new customer pipeline, we've decided to move the business into a new facility. We needed to scale up our capacity. We currently make about 500 of the consumable cassettes each month at the moment out of Vancouver. and based on demand that we see over the next 12 months, need to increase that capacity to up to 5,000 cassettes per month. So we've gone for a new facility with a manufacturing footprint 4 times the original site's capacity, and we're looking forward to continuing to support our ever-growing US customer list with supply of this key product as we roll out the technology into the marketplace. As well as regreening some of the distributors, we've brought on new salespeople. So having installed an Iona base in Mexico, we see quite a big market in the LATAM region. So we brought on a senior commercial LATAM leader based in that region to help us install and make the most of the market opportunity there as well. And having seen a lot of the challenges that we had in APAC now being resolved, we've decided to support that with some additional commercial headcount based out of Singapore in Taiwan. As an overall business, we've grown to 280 people, which is up nearly 100 people since we spoke last in September. A lot of those have gone into our testing team, where we now run a 24-hour, 7-day-a-week shift pattern to make sure that we're always open for testing and sequencing. But we've made also investment in product marketing and the commercial side of the business to support the revenue growth that we're currently enjoying. So that seems like a perfect time to hand over to Barry to share what we hope you will agree with us are a very exciting set of financial results. Over to you, Barry.
Thank you, Lynn. Good afternoon, everybody. So this slide is the extract from the RNS front page, and then in the coming slides, I'll walk through into a bit more detail on each of these points. So revenues, as Lynn has said, significant growth, more than doubled to 17.5 million. Far and away record performance for the business, and almost as much as we did for the whole of the last financial year. Both business segments grew. Clearly, genomic services was heavily weighted into the COVID testing market in the UK, has grown significantly, but genomic technologies also increased. So that's a mix of COVID product sales, but also 9% growth from non-COVID offerings. Gross profit therefore pulled up to just over £10 million. Admin expenses were continuing to build the capabilities of the business, but they've not grown as fast, and that's really the formula for driving EBITDA. And pleased to say there's a significant swing in EBITDA of over £2 million and to an EBITDA figure of 2.1 for the half. The combination of those two things means that we've been able to be self-sufficient from a cash perspective, with the trading EBITDA cash surplus being used for working capital increases, particularly around debtors to support that growth. And the only cash outflows were around investing activities, as we'll see in a moment. Cash at the end of the half, 4.7 million, and robust at that kind of level. So the business has got good liquidity. We're able to fund our own trading and growth activities, and we're not looking to go out to the market anytime soon. And we'll talk about sort of the strategy going forward on funding. So I can do this. There we go. So just to dive into the revenue mix a bit more, clearly the pandemic has created lots of whirlwinds around the place, but our significant growth has been in the UK. COVID heavy, but not just COVID, and we've retained a strong European franchise. The international markets have suffered the worst, and Asia is still very much in significant restrictions, even 2 years in to the pandemic. But we're starting to lay the groundwork in that part of the world, and also now seeing North America opening up, and that should be really the big growth driver in the international segment going forward. The splits between the two segments, so genomic services, it is COVID heavy, but the capabilities that Hayden and the team are building are very much redeployable to other areas of clinical testing, of genomic testing, and that's been very much at the forefront of our plans. Is not do things that are disposable, but do things that can give us longevity as a business. The other services, the top slice, looks down year on year. That's really the Taiwanese contract that we announced back in February of this year. that they'd diverted their resources away from oncology testing, sadly, into COVID testing. They're starting to come back, not quite to the same scale yet, but they are starting to come back. But apart from that one contract, the research service side of what we do has been very stable, and we've got a really strong pipeline, which Hayden will discuss in a bit further. NIPT testing, there's been a bit of churn there, particularly in the UK market, where the NHS introduced reimbursement. That's moved some of our service activity over to the technologies line through St George's, who are performing very strongly. We've seen some transition of public hospitals who were sending samples to us, sending them to the Northern NHS lab, which is not in our ecosystem. But at the same time, we've secured private customers as well, private clinics, to replace that. So overall, it's been stable, but quite a bit of sort of reshaping of that. And now we're well positioned to take that side forward as well. So genomic services, heavy COVID dependent, but very much not just a COVID story. Genomic technologies, NIPT, Lynn's described some of the sort of cyclical and transitional elements that we've faced there. That sort of all combined to a decline in the first half year on year. But we're through those issues now. We're rolling out optimizations in the second half of the year and starting to have installs in new territories, which will turn that corner for NIPT. The real big driver will be the US NIPT market, the world's biggest. And we've been laying the groundwork there for some time and hope to see that coming through in the very near term. So we see NIPT as one of the growth drivers. Reproductive is the PCR product range that we bought when we bought Elucigene Diagnostics. That's proved to be very stable, single-digit growth, but consistent growth, high margin, good ballast for the business. Infectious disease is the Clarigene product line for COVID. And then the Ranger and other is the new segment on that chart. And that's really the coastal technology. We had 6 months this half and only 2 last year. But even on a like-for-like basis, we've more than doubled the revenues there and huge growth potential in that market. The other is DPYD, and that we did over 500,000 of revenues in the first half for DPYD, more than double the previous year. And we're well on track for that to be £1 million plus product per year. So a lot of mixed changes in there, but a number of growth drivers now to support that message that Lynn was giving earlier. That's the revenue mix, the main KPIs on the financial side, therefore the revenues and the gross profit growth outstripping OPEX growth, really leading to that significant EBITDA swing in our favour, and looking to drive that further. We've built a lot of infrastructure now in the business. We've got very strong commercial teams, much more geographically diverse, so therefore should be more resilient to the kind of issues we've seen in the last year or two, and really well set to drive that EBITDA figure further forward. The slide on the bottom left here is really just giving you a bridge for where's the EBITDA being generated in the first half of the year, and how is it being deployed. So genomic services has generated the majority of that gross profit. Some of that it's consumed in additional people, additional lab infrastructure, but still leaving a sizable surplus, which we've been deploying to build out our commercial teams on the product side of the business, particularly North America, but also in Asia. And as Lynn said, Latin America is starting to be part of that mix. And also building some of our central support activities, particularly on product management and those kind of areas where they create real catalysts for growth around the business. But not spending it all and seeing that EBITDA upswing as well. So building our self-sufficiency and keeping us in control of our destiny. In terms of cash flows, we thought it might be helpful just to see how the shape of our cash flows have changed over the last few years. So you can see now we're sort of moving to generating trading surpluses. Because it's rapid growth, obviously that's inevitably leads to some working capital consumption. Debtors are very much under control. The debtor days have actually reduced in the half. And the combination of those is where we're saying trading is cash neutral. Investing activities, we spent significant amounts last year to build our capabilities, our capacity, and we're bearing the fruits of that. But we're continuing to invest, and for example, into the new Canadian facility. There was continuing to invest, but not quite at the same rate. And that's meaning in the previous two first halves of the year, we acquired Elucigene Diagnostics 2 years ago, Coastal Genomics last year. We're now very much trying to sort of maximize the returns from those activities rather than seeking additional funding. And to that end, we've got a strong balance sheet now, much stronger than we've had before, and we are starting to engage in conversations about debt facilities to augment cash reserves and really look to create ourselves a war chest for future M&A activity that's either not dilutive at all to shareholders or is only partially dilutive. So we're putting in place those facilities as well as a pipeline of M&A opportunities. So that's the financial section. So I'll hand back to Lynn.
I'm being a bit trigger happy there. So as always, I like to just refresh and remind everyone where we are on our growth strategy. And the growth strategy has been constant for the last 3 years. It's about getting more content, so portfolio expansion. It's about entering more geographic territories, and where we have an existing set of customers, making sure that we sell more to those. And if we can complement or accelerate any of that through an M&A offering, then obviously we will be looking to do that. I think from a portfolio perspective, the fact that we now have IP in our system, the fact that we now started the very process when a sample is taken with sample preparation, and the fact that we have now over 100 products and services that we're routinely selling into the global marketplace, I think demonstrates quite successfully that we're on track with our plans from a portfolio perspective. With regard to geographic expansion, continued focus in America. As Barry said, we spent the last 24 months really setting up a foundation there. COVID did hit that and has forced us to shift our attention to having a bit more resource in country, and that's working through now with the pipeline. We've seen good growth year on year in the US, and we expect US next year to be a significant growth driver off the back of some of the Coastal Genomics contracts, off the back of our new NIPT installations, and off the back of the wider range of products that most of which have got reimbursement codes, have the right regulatory accreditation, and can be sold in America. It's just about finding the right partner to turbocharge our direct sales approach. In terms of market penetration, we've done a lot of digital content. We spent a lot of time in the last couple of months visiting customers again, and we're starting to shift the customer base away from single product purchases into multi-product purchases. That range sell that we'd always spoken around was our ambition. So I think when we look at the first 3 pillars of our growth strategy, we're on plan, which we're achieving and we're executing as we hoped. From an M&A perspective, that's been a bit more challenging under lockdown, which is a shame because it's been, an important part of our growth story over the last couple of years. But as Barry mentioned, we're close to having a debt facility in place. We're now starting to generate our own cash, which is leading us to, have an aspiration to have a bit of a war chest so that we can pick up M&A activity again, in the hope to accelerate the plans specifically around new content and new customers in specific geographic regions. And I think just to give a bit more flavor again, I'm sorry to dive into the detail here, but one of the questions that's popped up is, what are we going to do to, upgrade our story? We must be frustrated with the share price performance at the moment. And one of the things we've reflected on as a team is that we haven't been able to spend as much time with our shareholders in the last 18 months. So this is about, the repositioning of the story for updating everyone, what this organization now is, how many customers we have, how we access those customers. So Hayden, if I could hand over to you for these next 2 slides to talk through a bit of that detail, please.
Sure, Lynn. And picking up on the first of those pillars that Lynn was talking around about expanding our core portfolio. And as we've talked about, having now over 100 products and services available into the market, it enables us to look at this in terms of a portfolio segmentation and the customer segmentation. Our customers tend to fall into a number of areas, both in the genomic technologies and the genomic services area. And those are labs, whether they be public hospitals, private hospitals, reference labs, or biotech and diagnostic companies. and we're able to supply in a range of products and services into those key customer segments that allow us to have a great diversity in our product mix. A couple of these highlights that I'd like to pick out are things like the NIPT workflow, where we supply across a range of customers in the UK, in both private clinics and in the NHS, supporting St George's in the national framework tender there. And we also run it in our lab. And again, that allows us to be able to support our colleagues in genomic technologies, and they're selling that, and also be able to act as a backup lab or a testing center for them. Within the services where we are touching into those private labs, we're adding in additional content with our reproductive health PCR products, again, supporting and growing that customer base to offer more and more solutions to each one of those customers. One of the questions I saw that popped up was about the expansion of the capabilities and the testing within our genomic services there, and how do we going to leverage that. We've built up through the acquisition of X5 a number of very good pharma and clinical diagnostic and biotech pipelines, where we are actively working with those customers to bring in more products and more services into the business. And we're going to build on the infrastructure that we've had to enable that high throughput testing. We've operated in new clinical areas, bringing on oncology assays and something called the GenoScore, which is an early Alzheimer's test that we work with a partner called Cytox for, and that allows people to be staged in the disease management. And lastly, we'll talk a little bit more about Ranger technology from Coastal Genomics and how we bring that through, and how that is helping us expand our offering, both from the services and the technologies point of view. Ranger technology is used for liquid biopsy, for viral testing, for research services, and obviously for NIPT, as it features in both of our markets. And very lastly on this slide, talking about DPYD, that product that is growing to over £1 million a year, is a key first stage into oncology for us. And we're very proud of that, because it saves 10% of people, 1% of people, 10% of people who are having 5-FU treatment, which is the most common chemotherapy agent, having a toxic event. And looking at our core capabilities, we're able to develop and manufacture regulated in vitro diagnostic assays and reagents. We have scalable and integrated automated workflows, and we develop our own bioinformatics and software. This is all built on our cell-free DNA expertise in detection and sizing, and we're able to offer bespoke solutions to a number of our customers. There's the range of technology that we've spoken about, and you can see the LightBench pictured here, is used in all sorts of cell-free DNA applications, such as liquid biopsy and oncology, viral testing, and NIPT. Liquid biopsy is one of the fastest growing markets in diagnostics, and it's a great way for us to enter new markets and new customers by being there at the forefront of sizing the DNA and RNA that those customers are looking for. We provide the software platform, the reagents, and the consumables, and we developed a scalable solution where a customer may want a small box where they're doing a small number of samples, and we develop bespoke high throughput solutions with Hamilton Robotics, and that is something that we're seeing deployed in a number of our potential customers. And of course, we've utilized this technology in genomic services, and it's also used in our NIPT workflows, Iona NX, Iona Care, Sage, and Sage 32-plex. So it's a very rounded, important part of our offering, and part of that makes up that 100 or so products that we have and services we have in the market.
Thank you, Hayden, and thank you everyone for listening. As I said, to a bit of a repositioning and a deep dive, just to see how far the organization has grown over the last sort of 2 years. So I'm just going to focus on the sort of next chapter, what we're looking forward to as a business. We mentioned it many times today, obviously continuing the strong momentum that we're seeing in the US. I completed my first business trip there a couple of weeks back, and Ranger technology is on everyone's lips. Our NIPT install on the East Coast of America is just waiting for one final batch of raw materials before we finalize the validation of that product. And we expect to be up and running in our fourth quarter, which obviously starts in January next year. And we built an exciting pipeline of opportunity, not just for NIPT, but also for our additional products and services, with a real key focus on this Ranger technology that we acquired from Vancouver. We expect to continue to offer our COVID-19 customers, both public and private, the services that we've been offering over the last sort of 8 months, building on the existing partnerships developed through COVID for future growth across other applications and segments is a particular goal of ours. So as and when COVID stops, and my view on it is, look, guys, we're 2 years into this and we're seeing record numbers of COVID cases in the country at the moment. More measures are coming into play. COVID doesn't seem to be going anywhere soon. So we expect this to be a revenue, contributor for our business for a couple of years to come. When that does subside, we'll be able to take the invested footprint and look to find additional non-COVID work through that. And the next point in this presentation really speaks to that. We've got multiple tenders in place for genomic services at the moment that we're actively bidding on. About 30% of those are non-COVID. So as you can see, we're already focusing on life after COVID, but just to be clear, we think COVID's going to be with us for a long time yet to come. We've got our new international facilities displayed on the slide to the left of the text. The bottom one, Yourgene Health Canada, is our new facility where we're going to be increasing that operational output and footprint to make sure that we meet the customer demand that we expect to see over the next year or two. And as I've already mentioned, as we sort of come off the back of our H1, we see the run rate that we sustained there coming into H2. And as I've said, finishing November at slightly north of 23 million bodes well for the financial performance for the rest of this year with 4 months left to go. We've obviously upgraded, the analysts have upgraded the numbers again this morning. So we will keep you updated as to how this new sequencing contract plays into that and how the business performs in the next couple of months. We'll have an update for you in the new year. So I think that's the end of the formal presentation. I'm just going to switch my deck.
That's great.
Questions.
Let me just jump in, Lynn, and give you a few moments between the Q&A. But thank you to all of you for your presentation this afternoon. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of the screen. But just while the team take a few moments to review those investor questions submitted already, I'd like to remind you the recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet Company dashboard. I'd also like to remind you that your feedback is important to the company, and immediately after this presentation has ended, we'll redirect you for the opportunity to provide feedback in order the company can really better understand your views and expectations. Lynn, Barry, Hayden, I haven't given you a lot of time, but you can see on the right-hand side you've received a considerable number of questions from investors. Could I please hand back to you guys, and if I could ask you to read out the questions and give a response where it's appropriate to do so, and then I'll pick up from you at the end.
Yeah, thank you. And my team, I'll pick up the questions and invite responses as need be. Okay, so we've had a question from Tim W. Given the great success that the company has had in the past 12 months and the forward momentum you have, how disappointed are you to see your share price 20% lower than 12 months ago? I think Nigel C asks a very similar question and quotes a couple of other stocks that seem to be surging at the moment. And Michael M, stunning results, but share price down 1%. I mean, guys, when I look at the summary, the summary of what we've just presented, 2 revenue upgrades in the last couple of months, with potential for more, revenue 100% growth, gross profit 100% growth, EBITDA swing to give us a 2 million or 2.1 million EBITDA position at the end of the first 6 months, 23 million pounds worth of revenue after the first 8 months, 100 products and services now in operation. Investment strategy that we made last year clearly starting to reap rewards, moving closely towards a debt facility be in place, and a team of 270 incredibly talented and incredibly hardworking individuals now part of the Yourgene family. Yeah, it's frustrating to see the share price where it is today. Very, very frustrating. And I know we faced these kind of questions before, and I think one of the good questions that we've got here is, what are we going to do about that? Well, we've met as a team and we feel that we do need to reposition the story. The story has moved on a lot from what was just an NIPT pure play 3 years ago. We shared our ambition about growing a wider product portfolio with greater customer access, greater geographical segmentation, and I feel we've achieved all of that. So part of our ambition and our objectives in the last quarter, or the start of next year, is to get more front and center with the market, hopefully to hold a capital markets day so we can explain in more detail all of these growth levers, other than being just pigeoned as a COVID stock, or is an out-and-out pure play for NIPT. So we are looking to work and focus on that. Obviously, the end ambition of that work and that improved communication will be to attract more institutional investors. That's our, overarching ambition. But I can assure you, we are doing all we can in terms of the execution of the business plan to make sure that that share price starts moving, and hopefully the market will wake up to the progress that we've made over the last couple of months, and that will be reflected in the share price. So I think we've covered quite a few of those initial questions that are coming through. Paul M asks, when will NIPT return to growth? I think we've covered that in a slide. I think we've explained it's been a challenging 6 months, and that we kind of held stable ground on that on a normalized basis. And with the US, and the first of the US accounts to come online early in the new year, we would expect NIPT to be growing off the back of the US alone, without mentioning a lot of our new European country territory growths as well. Okay, Ron B's asked, looking at previous slides, you show that you've increased headcount 3.5 times when revenue has only increased by 2.8 times. If revenue had grown in line with staffing, we would see 21.7 million. Is the company happy with this level of productivity, or does it believe it might benefit from a rationalization of product mix? Barry, do you want to have a little crack at that one?
Yes, thank you. I think the nature of the business, so it's much more service intensive now. So that by definition, there's more labor content to that, receiving samples, processing them. There is a lot of automation, but it still very much requires talented lab technicians, lab scientists. So I think that's why you're probably seeing the ratio of headcount to revenue. I think it's difficult to draw conclusions on productivity, but we do look very hard at our product range, make sure we're not busy fools doing things that don't really make sense strategically. So I sort of take the point generally, but I think the specifics, it's really more that mix of moving from a more product heavy mix to a service heavy mix is why the headcount numbers changed a little bit.
Thank you, Barry. Oh, I've missed a question from Justin. Certainly an impressive growth story shown on slide. Do you have any expectation of the growth contribution from the LabCo deal and indeed the other US blue chip deal? Yeah, we'd expect those to be featuring on our numbers from next financial year onwards, as they just go through their final stages of validation within the two customer accounts. So I think it's fair to say, Justin, we'll see some of that next year for sure. And Justin's been busy. So another question, lab services capacity. Future testing would be great to hear further plans on how you intend to strategically leverage those as COVID services decline. When do you see the business starting to pivot to the new offering to hopefully smooth out any drop-off in COVID testing? As I said, I don't see any immediate drop-off in COVID testing, and there was an interesting article in the FT over the weekend that suggested, this kind of testing and tracking us is going to be in play for at least another 3 to 5 years. So I think we could certainly continue to offer services in that space during that period. But Hayden, do you want to give us a bit of a flash into the future as to the sort of accounts you're targeting to replace COVID?
Sure, Lynn. What we've done is we've built an infrastructure that allows us to process samples at a very high volume, so we can look at other applications there. And we go also, we could look at things like if there was a flu pandemic, we could move into that, but also serving some of the unmet needs within the NHS in the UK, enable us to process anything that is taken via a swab through that existing system. But I think really the very important one is the sequencing contract that we have announced today, because that plays into our real core strength. We are a sequencing company through our origin, and working with the DHSC to provide a high throughput, very high quality sequencing capability is something that pharma companies and biotech companies are looking for. And we're able to leverage that in through having continued discussions around that, as well as the ability to process a large volume of samples, whether it's PCR sequencing or just doing sample extraction. Those unique services and capabilities that we've looked to leverage into pharma, into biotech, and to other diagnostic applications.
And we've got a pipeline already starting to build in those areas, haven't we?
We have indeed.
Thank you, Hayden. We've got a question from Roger C about asking Barry if we can share the EPS forecast for the end of the financial year.
Well, it sounds unglamorous, but 0.0 is my aspiration, which is profitability, bottom line profitability. As if we can remove the brackets, then we're on to something.
Thank you, Barry. Paul M has asked, the company won all 4 PHE lots. Yes, but we were one of only a handful of companies that did that. Could there be substantial revenues awarded to the company outside of COVID testing? I mean, I think the framework was put in place predominantly to manage COVID testing, but I'm sure there will be wider opportunities as the pandemic matures and flattens out. Again, Justin, cash flow overview on page 15 looks like a good story. I still think the market is concerned that the costs seen in the half are recurring in nature. Would be great to hear what is the split between recurring and one-off expenditure regarding the H1 admin expenses, and to reassure that much of these are an investment in capability. Again, that sounds like a Barry question.
It's a good question. I mean, the implication is that we expect to see revenues drop away afterward, after some COVID peak. That's not what we're aiming for. So, but we have been cautious about ramping up the resources, and we've tried to do that as flexibly as possible so that we can either redeploy from one growth area to another, or to just sort of shrink back unnecessary costs at the time. We've done a lot in automation, which therefore would not incur additional marginal costs to add much revenue to the mix. So we've tried to sort of navigate that, but the ideal scenario and the one we're working to is that we redeploy if and when COVID starts to fade, that we are able to redeploy that, and we have pipeline opportunities that can use those same resources.
Thank you, Barry. Paul M has asked, you mentioned debt. So what is the optimum level of debt for the business? Will this be used to fund growth or M&A? Well, we've never really had, we've had debt before, but after we wrote off so much of it, we welcomed a period with no debt. As the business is maturing, and hopefully you've seen that from the presentation today, I think we've matured a lot in the last 18 months. It is normal business practice to go and get some debt. Debt is quite cheap at the moment. So I think our initial foray into that is there just in case we see some M&A activity that we want to pursue. I think we've demonstrated this year our ability to fund and invest in ourselves based on the revenue we generate as a business. So I don't think there's a really straight answer I could give you on that, Paul, other than, as I said, we're starting to operate normalized business levels, debt levels for a business of our size, and they will be in place for supporting accretive M&A growth in the future. Ron B, even with greater than doubling of the revenue, which should be celebrated in this challenging time. Thank you, Ron. You have still been able to create a profitable business. Okay. Should Yourgene be looking towards higher margin creation, such as retail commercialization of Clarigene, as already seen by Amazon? I think the quick answer to that is no. We know what we're good at, and we like to stick to what we're good at. And retailer is not something that we've been historically strong at. It's not something that we have huge inroads into. So we work with some very credible partners that have kept the high streets going this year. MHC, My Health Checked, with their partnership and support of Boots, has given us a great inroad into the retail sector. But it's one of many product or market channels that we operate. So I don't think we will be focusing specifically around trying to get closer to the retail customer. Nigel C, are we actively courting institutional investors to form a more solid bedrock of investment? Yes, that is an ambition of ours. And as I mentioned earlier, we're looking to hold a Cap Markets Day either towards the end of the fourth quarter or early first quarter, so March or April next year, with a view of it just explaining to the various existing shareholders and hopefully some new interested shareholders the exact makeup of this business, and to go into detail around our growth engines and drivers to make sure that we can, in the future attract as many institutional shareholders as we can. Congratulations. Look like exciting times at Yourgene. However, is it time to put more emphasis on generating cash as a shareholder? I don't fancy a place in a 12p a share or less. I don't think we do either. Do we, Barry? No. Which is why I think we're focusing on driving the revenues and the margins as best as we can. So we, as you say, Mark, have more control of our own destiny ourselves. Raja, you've asked a similar question about Yourgene not focusing more on retail. I think I've given my answer on that. Roger, again, as Yourgene management, what do you think is amiss or needs to be done in order to boost confidence and deliver shareholder value? As I said, I mean, I'm sitting here today just struggling looking at that list of achievements that we've rolled off this year. You know, what more we could have really done. I think just keeping the faith, making sure that we continue on a quarter-by-quarter basis, as it seems to be the pattern at the moment in these challenging times, to update with good news, with positive momentum. And to continue to be focused on executing the business plan. If we continue to do that, I'm sure that the market will catch up. Regarding the first DHSC contract, is that ongoing, Hayden, or is that now finished?
The Autumn Surge contract were completed on November the 14th, but we continue to support all our partners in COVID testing.
Okay, thank you, Hayden. Barry, one for you. Which analysts have updated their numbers?
So we have two brokers in Singer Capital Markets and Stifel. So they've published notes this morning, moving their revenue expectations up from 20. They're both very close to each other, about 27 million, rising to 29 million now, and EBITDA moving up from 3.1, 3.2 up to 3.4, 3.5 million. So they're the upgrades that have happened. Walbrook will be putting out a consensus note, which they provide to retail investors. So that will sort of average out those two. So now expectations are 29 million for the year, based on their performance to date.
Assuming H1 run rate sustained into H2, what's your expectation on profit conversion and EBITDA while war chest building? I think as Barry's just articulated, there's a new set of consensus numbers out there from the analysts. We will add to them as we need to as we go through the remainder of the 4 months left of this trading year. But the direction of travel is very, very positive, I would say, at the moment. Bruno B, are the management and directors thinking about Yourgene shares at those low levels? Yes, it seems like a good investment, I would say. Jonathan M, oh, sorry, I just pressed the wrong button. You mentioned a number of times DPYD being £1 million product. Do you foresee significant growth from there once the product becomes more globally known? Yes. You know, for example, there's a reimbursement code for a DPYD product in the US. And just before the first lockdown happened, we were engaging with key opinion leaders in the US about taking that product to market. Those are one of the initiatives that have unfortunately stalled as a result of COVID. That myself and Hayden were in the US, specifically, you know, meeting with some partners around that. I think it would be good to get some distribution support to make up for some of the lost time around DPYD. But it's a product that I would expect to see grow internationally on a year-by-year basis moving forward. As you grow, could you become a target for the really big pharma companies? Yeah, I mean, I think the market will consolidate. I think there'll be a lot of consolidation in the next couple of years. There's a lot of deep pockets in healthcare, and it's certainly an area where I think it's a rather safe investment, you know, given all the things that we've lived through over the last 2 years. So I would expect consolidation to happen. Whether we appear on anyone's radar or not, I think depends on our performance. But I think I've spoken before about being that white rhino, that rare molecular company that has its own product development, can manufacture its own product, has its own labs as well as its own external customers, is profitable. You know, and certainly the move towards EBITDA and fast-growing revenue that we've delivered this year, you know, I'm sure will make us stand out to some people in the crowd. Is there a big margin difference between testing in your own lab and elsewhere? Yeah, obviously, if we run a test in our own facility and we use our own product, there's a margin improvement. Whereas, if we're just sending our product to elsewhere, then we only get the product sale on that. So it does affect revenue and margin. Back to the share price. Are Walbrook not being paid to make us more visible in the market and to promote us as an exceptional business? Yes, they are. And I know the team at Walbrook really, really well, and I know they're doing their best with that. And hopefully with the news that we brought to the market today, that will help them in their efforts to promote us as an exceptional business. 0.6 and 0.6 is way off the 30 million potential max value of the initial contract. Is there a feeling that today's contract will reach that 5.5 million? Thank you, Stephen, for your question. That's the problem with these contracts. They have no minimums, and they have a potential maximum. We always thought that the 30 million pound contract, and we were a bit concerned with that number, was put in the market because we didn't expect to pick up anywhere near that volume. I think it's fair to say, based on the sequencing, that potentially could happen in the next 4 months. We feel confident of making some, good revenue off the back of the sequencing contract. And as I said, we should have a capacity to deliver about 500 samples per day. And Hayden has a plan to increase that further. So if the demand is there, we'll be able to meet that demand with our capacity. So all to play for, Stephen. Encouraging to see significant investments in Canada and US enabled to scale. Is it safe to say this is off the back of healthy projection for sales? Yeah, NGNY. Yeah, that is absolutely based off the forecast that we see. You sign up companies such as Labcorp. They're so large and they're so deep reaching into the US market that you have to make sure your supply chain is backed up. It's a bit like doing a deal with Walmart in the retail sector. You have to make sure you have the horsepower behind you to meet their demands. And I'm sure we're going to be able to deliver on that. Barry, Bruno B is asking, what operating margin level are we targeting in the medium term?
Good question. I think we're treating it's a bit like climbing Everest. You sort of want to get to base camp and then you build from there. We're currently just over 10% EBITDA, and that's about break even net profit. I think we'll be looking probably to aim to get to 20% EBITDA, which should then be a 10% net profit level. I think that would probably be sort of base camp for a profitable business, and then we would obviously look to drive it from there. But that would be our initial aspiration, is to get to that kind of level.
Lynn, Barry, Hayden, I might just jump in, seeing as we're coming up to the hour and you've answered every question that's been submitted today by investors. So firstly, thank you to all those investors that have submitted questions today. I know investor feedback is particularly important to you guys, and I'll shortly redirect investors to provide you with their thoughts and expectations. But Lynn, before doing so, perhaps I could just hand back to you just for a few closing comments, just to wrap up with.
Yeah, thank you, Mark. And as I said, I'd like to just firstly say thank you to our 270 Yourgene family members across the organization and across the world who have made, what I feel are an exceptional set of results possible through, real hard work and real commitment in the face of some quite challenging, circumstances in the last 8 months or so. The business has reported record revenues, record profitability. We swung into EBITDA positive. We've got a great pipeline of products and services. Our international markets are opening up again. This is a good time to be invested in Yourgene, and we just want to say thank you for your continued support and effort, and let as your leadership team, we are doing all we can to ensure that this performance will continue through the next quarter as we close the year end out, and then springboard us into the new financial year. So thank you, everyone. I wish you, on behalf of everyone here at Yourgene, a healthy and safe and enjoyable Christmas. And we look forward to catching up, hopefully with a bit more personal contact in the new year. But until then, take care, everyone, and thank you very, very much.
That's great. Lynn, Barry, Hayden, thank you so much for updating investors this afternoon. Could I please ask investors not to close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order that the company can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by Lynn and the team. On behalf of the management team of Yourgene Health PLC, we'd like to thank you for attending today's presentation. Good afternoon to you all.